We're going into the new year with inflation rising at the fastest rate in 39 years, just as new COVID variants seem to emerge, prompting more restrictions, while tensions between the US and China and the US and Russia are escalating. So what can we expect from the US economy in 2022? Let's get the outlook from top trend forecaster Gerald Celente. Gerald is the publisher of the Trends Journal and the founder and director of the Trends Research Institute. Gerald, good to have you with us.
Well, thank you for having me on, Michelle.
All right, so Gerald, let's first focus on this newly released inflation data. Inflation surging 6.8% in November. This is the fastest rate since 1982. Now, you have been forecasting dragflation, Gerald. So what does that mean, particularly in context of this new data?
Well, first of all, on the new data, let's go back a year ago when it was only going to be temporary, and then it was going to be transitory. And now, well, maybe it'll keep going for a while. So there's reasons, by the way. They're either too stupid to know it was going to happen, or else they wanted to keep the markets artificially propped up, because when interest rates go up, the economy and the equity markets are going down. It was the whole thing has been pumped up. You know, you could stop the stuff about supply chain disruption. Yeah, that's part of it. All of the countless trillions of dollars that they've pumped into the economy to artificially boost it up is what's pushing up inflation. And now the imbeciles and morons, the people called government officials, have just increased the debt burden of the United States by only another $2.5 trillion so that we don't default on our debt. So dragflation is, no, it's not going to be a stagnant economy, stagflation. The economy is going to go down as inflation continues to go up. And they're going to get away with it for a while. But when interest rates, we see it, the Fed rate starts hitting around 1.5%, this thing is going to bust out. Again, this is global. You're looking at merger and acquisition activity in the United States. It hit an all-time high because they're borrowing all this cheap money and buying up everything. Same thing going on in Australia. So when we look at the real interest rate, what do we have? Near zero interest rate? Now we just mentioned, what, a 6.8% inflation rate? What is the real interest rate? It's in negative territory. So this whole thing is one big scam that's being used to artificially prop up the markets and prop up the economy. Again, when they start raising interest rates seriously, this thing's going to go down big and it's going to go down hard. And also, go back to 2018, right around this time of year. Merry Christmas. The markets were tanking back in 2018 before the COVID war began. And what happened? Donald Trump kept pushing Powell to lower interest rates. And he did. And that artificially propped the markets up again. But then what happened in September 2019? Oh, the repo markets. Oh, you mean when everything was crashing out and they dumped $7 trillion into the repo markets to artificially boost it up? So going back to dragflation, the whole thing is an artificial game. When real money comes back in, this thing's going down big.
Well, you know, Gerald, to your point, we have more and more money being pumped into the system now with this Biden administration infrastructure bill. And yet, even with this inflation rising at the fastest pace in 39 years, we don't have the equity markets react negatively to this. So far, U.S. markets have seemingly shrugged off the news here. Why is that?
Well, they're going to wait till the interest rates go up. They still got the cheap money, so they keep playing it. It's a gambling game. And by the way, this is a fake number. You go to John Williams' shadow stats. What that, again, you know, I don't call it a government. I call it a crime syndicate. By the deeds you shall know them. The banks, they're too big to fail. We'll give them all the money they need. You're a piece of garbage. You could lose your house, lose your life, lose your jobs. And they start wars based on lies. That guy Saddam Hussein has weapons of mass destruction and ties to Al-Qaeda. I'm calling it a crime syndicate because what they did, and Clinton was the worst of this, is they rigged the inflation numbers. Oh, the housing prices went up, what, about 19.5%? No, that's not inflation. No, don't even bother. We're not going to count that. The reason they're keeping the inflation numbers artificially low, if you're comparing this to 1982 inflation, if you use the same index that they used in 1980, inflation would be at 15%. They're keeping it low so they don't have to raise interest rates. And number two, because when inflation goes up, so too does Social Security. So why give the little people of Slavelandia more money? Will artificially keep the inflation rate down. So your real inflation rate's around 15%.
All right, but even with this manipulated inflation rate, as you're calling it, it's clear that there is going to be action that needs to be taken to tame the inflation beast. And the only way to really do that is to raise interest rates. We know the Fed is expected to accelerate the tapering process, ending the bond buying potentially by March. That opens the door to the Fed to raise interest rates next spring. And it seems like the focus is now on restraining inflation. As you say, Gerald, this is from the same Fed that said, no, don't worry, it's only transitory. So you think that the Fed is going to raise rates. My question is when and how aggressively? And then you say this blows everything up then.
Yeah, they're going to do it. I believe they're going to do it sooner rather than later, near the beginning of the year, in January, February. And they're going to do it step by step. They'll play the markets out. I believe we're going to probably get through a lot of 2022 in moderately good shape. It's going to start really declining after that. When my hit point is when the Fed rate hits around 1.5%. That's going to be the end. And here's what they're going to do as well. Again, history repeats itself. Before the elections in 2024, they'll start lowering interest rates to artificially prop up the economy again. They do it all the time. So that's going to be the other part of it. They'll raise it.
So you're saying 1.5, when interest rates hit 1.5, when the Fed rate hits that is going to be the end. You mean we're going to see an equity crash? What do you predict when you say
definitely.
The end?
Yeah, look at the PE ratio. It's way out of line now. It's near its all-time highs. Yeah, there's going to be a crash. There's absolutely no question about it. And again, that brings us back to the other issue of this. People ask me, what should you invest in? And I don't give investment advice. Mine is GSB, gold, silver, and Bitcoin. Gold and silver are going to take a hit down as inflation rates go up. But when the economy goes down, then your safe haven assets really are worth a lot more. All you have to do is go back to the Panic of '08 to watch that happen. So when interest rates go up, they're going to go down temporarily, but only for a little while. And again, the only reason the dollar is so strong is they have no competition. What do you have? A debt to GDP ratio in the United States about 106. You have China's near 300. Japan's only about 272. So the dollar is not really strong. It only appears to be because it has no competition.
Right. Well, let's focus on GSB, gold, silver, Bitcoin, because you spoke to my colleague, David Lin, in January of this year. You were very correct in your inflation forecast, but you said that you expected to see gold at $2,100 this year.
Yep.
And silver at $50. So what happened there?
The cryptocurrencies are about $3 trillion worth of trading. The money that went into crypto didn't go into gold and silver. And then again, I don't know if they're doing it now, but the fact is, a place called JP Morgan Chase got fined how much? $900 million. Why did they get fined? For rigging the precious metals markets? A crime. But you, Michelle, you were 7 miles over the speed limit. Where were you? What'd you have to drink? Get out of your car and stand on your head and repeat the alphabet backwards. But when Jamie Dimon and the gang rigged the precious metals markets, slap on the wrist And aren't they wonderful people?
Well, expand on that, rigged the precious metals market.
They rigged the precious metals market. They were found guilty of rigging the precious metals market in 2019. They had to pay a fine of $900 million. Nobody goes to jail. It's only a fine. Oh, and then, you look at the whole, again, I'm not making this up to show when I say it's a crime syndicate. You look at the 131 federal judges that ruled on cases in which they had financial interests.
Right.
So yes, the gold and silver should have gone much higher. Why would the equity market? Aren't the equity markets doing great right now? How about those airline stocks and the cruise ships? They had a great week. Oh yeah, as Israel, Italy, United States, Great Britain, one country after another, restricting travel. Do you know what international travel was in November compared to 2019? It was only 33% of what it was in 2019. And you're telling me it's wise investment to go into airlines and cruise ships. The thing is a rigged game.
You're saying that all equities are rigged here, or particular
I wouldn't say
sectors?
all of them. But again, you look at the people playing the markets and what it's turned into. These aren't investors. It's a gambler's game. How could the equity markets be going up? How could the economy, no vax, no freedom in Austria, no vax, no freedom in Italy, no vax, no freedom in Ireland, no vax, no freedom in Switzerland and Czech Republic, on and on and on. How can the markets keep going up if you're going to take out, let's give a number of about 30% of the population that is not going to be eligible to do what they used to be doing. And again, now you have these travel restrictions. Oh, New York City, you're in New York City, isn't the commercial real estate sector is doing great. It only has a 28% office occupancy rate. So it's a rigged game.
All right. So Gerald, I hear your point. Certainly that when it comes to the legal system, not every player is treated the same. I hear your point that as more and more places impose vaccine mandates, it's going to hamper movements and it's ultimately going to affect the economy for those that refuse to play along. But I want to circle back to gold, silver, and Bitcoin, because earlier you said that even though inflation is going to rise, you don't think that gold and silver are going to rise along with it initially. Why is that? Because
they're going to raise interest rates. And the money that it becomes more expensive to buy gold and silver, to buy all commodities. So the money's going to go into more, safer bets on getting your money back with a higher interest rate.
Do you have an outlook for gold and silver? I know earlier this year you called it at $2,100 for gold and $50 for silver. Do you have an outlook of where you see gold and silver?
I really don't. No? I really don't. I have a. Again, for me, the Bitcoin is still, even though it's gone down, what we're still talking is now is still around $49,000. So if it goes down to like 35,000, 25,000, then it could blow out. But gold and silver, I think they're in their low points of their trading range right now.
But when you say blow out, if Bitcoin hits 25,000, you mean go down to zero? What do you mean by blow out?
Not zero. I could see it going down to, back to the 8,000 marks when it happened, when it hit, 17,000 back in, 2019 or 2018, around that time, or 2017. And then it took a big hit down, that kind of big hit. It could have a big correction, but I don't see it going away. Again, the only way I see the cryptocurrencies going out is if the governments ban them. And that's what's going to hit them the hardest. But again, look what's going on in China. They banned them, and what are they coming out with? They're coming out with the digital yuan. They don't want competition. So if it becomes that kind of a thing, that's going to be downward pressure. But gold and silver, to me, are long-term investments. I don't play the markets. I play them long-term. I began buying gold at $178 an ounce. Excuse me, $187 an ounce back in the 70s. So I just keep buying it and putting it away, buying it and putting it away, buying it and putting it away.
All right, I want to go back to Bitcoin because you started off earlier this interview saying GSB, this is what you're looking at, but now you're telling me that you can see Bitcoin essentially, if it hits 25,000, essentially going down to about 8,000, which is a very different prediction from the $100,000 Bitcoin that a lot of people are expecting by April of this year on the very same concerns of inflation, of too much money in the system, of dollar devaluation. So what do you see pushing Bitcoin down to that level?
Well, again, the only thing to me that would push it down to that level is government control.
Okay.
That's what I'm saying. If it goes down, if they really come down and clamp down on it, then it goes out. And again, going back to why 10 years ago, 11 years ago, you didn't have cryptocurrencies. So all the money that would have gone into safe haven assets, such as gold and silver, now you got $3 or $4 trillion going into that direction. But then you're still seeing, gold, especially in India and China, individual purchases going up. So we don't see it going away. And again, are the markets rigged?
Are the Bitcoin markets rigged? Are the crypto markets
I don't think
rigged?
so.
Or are all markets rigged, according to you?
No. The equity markets are a different game. The Bitcoin, it's the individuals. Matter of fact, I was just a speaker down at the in Miami back in November.
Right.
Market disruptors, So it's a very different group of people.
So now in your trend report, you wrote that cryptos can keep the dollar honest while the dollar keeps crypto tokens honest. So explain that. What do you mean by that?
Well, in the sense that, cryptos are they're the currency that the people will keep going into if the dollar keeps getting weaker. And the dollar is going to have to get stronger for the cryptos and the other ones to go down at any kind of point. So why is the dollar even where it is when you're looking now at a debt level of what? Almost $30 trillion? And they just said, so we don't default on our debt. We're going to pump in another $2.5 trillion. So it's as long as the dollar is artificially strong, everything else kind of blends out. But again, you're going to start seeing disruptions going on in a lot of areas. So and around the world. So the world is bigger than the United States.
Sure. But let's just focus on Bitcoin and cryptos right now, because we did see more institutional interest, broader acceptance, more adoption for Bitcoin and cryptos in 2021. So what do you expect overall for Bitcoin and cryptocurrencies if you want to separate them or group them together in 2022?
I see them going up. I see them continuing to go up. There's a whole generation out there of different people that don't trust anything going on in the government in any way. And they're going to keep investing in those areas. But again, what could bring them down are government actions. And you're seeing it with Gensler on and on going, as the guy that had the SEC, keep pushing more and more regulations. But as you mentioned, you're seeing more and more investors, banks, private equity groups, et cetera, getting into it. So as long as they keep going into it, it keeps going up. The more of Wall Street that goes into it, the more the banks go into it, the higher it goes.
Can we say that the more of institutional investment and interest that goes into Bitcoin and cryptocurrencies, but let's keep it focused on Bitcoin, shall we say, the less likely it is that governments will then outlaw it, as you say? Or the US government?
It's hard to tell. Yeah, I mean, once upon a time, not too long ago, and long ago when you put it in ages that, of our lives, I mean, the government one day decided you can't own gold, 1933, just like that. You're not allowed to own gold. Turn it in for what, $22 an ounce? And after we get it all in, we're going to raise it to $33 an ounce. So they'll do anything they want. As I said, it's a crime syndicate. They'll make up anything they want at any time to do anything.
So really no way of ascertaining that is what I'm hearing you say. Gerald, I do want to focus on some of the other trends you're forecasting. You mentioned that you anticipate more unionization. Now we're seeing that very recently. We had the first Starbucks store voting to unionize employees at a location in Buffalo, voting in favor of joining a workers' union. So if this trend of unionization does indeed continue, what is the economic impact there?
Well, inflation goes up because the cost of labor is going to go up. And again, what you're looking at, you mentioned Starbucks, go to Kellogg, Deere, one after another. It's a supply and demand issue. We had that great resignation of all these people pulling out of the workforce. Just in the last month, report was another 4.2 million. So it's supply and demand, and you can't find enough workers. So it's going to keep bringing inflation up. And again, you're looking at all the data coming in that is showing inflation is going to keep moving up. So for how long? It's hard to tell because, again, talking about supply and demand, you go back to the end of October, you had Brent crude selling at what? Almost $87 a barrel. Now you're down to around $73, $74 a barrel. Why? The supply and demand. So in even calling the big inflation picture, if the oil's going down, because as I mentioned, you're looking at air travel, you're looking at hotel occupancy, office occupancy rates. Well, in the United States, they're only around about 35%. So less travel, less use of the product,
right?
Deeper the price goes down.
But you're saying, okay, with unions, employees have more bargaining power, so they're going to bargain for higher wages. Higher wages will push up inflation even further. Yep. So again, in terms of an investor, what can one do to protect or benefit from this trend?
Well, again, I don't give financial advice. To me, I'm still with gold, silver, and Bitcoin. To me, I want safe haven assets.
Right.
Because I don't trust anything going on out there. And again, which we take a globalnomic view. Look what's going on in Turkey. You're looking at real inflation about 50%. You're looking at the lira lost about 48% against the dollar. When all else fails, they take you to war. Erdogan's done it before. He'll do it again. He did it with Syria. He did it with the Kurds. You're looking at destabilization. So any game could change. And when countries go down, when all else fails, they take you to war. Go back to 2000, the dot-com bust. What happened in 2001? The NASDAQ was only down 66% before 9/11. We were only in a deep recession. Afghan war, forget about all that. So you don't know what's going to go on. If conflict breaks out in the Middle East, you're going to see oil. Oh, by the way, I believe oil prices are going to go back up because they've cut a lot back on production in a lot of different ways. If you have conflict breaking out in the Middle East and you have oil starting to hit like $100 a barrel, forget the economy, forget inflation. It's going to go in a cycle we've never seen before, and it's going to bring down a lot. So we look at the geopolitics as well. And you mentioned before about the United States, what's going on with Russia, what's going on with China. It's not like happy days are here again.
No. I do want to touch on geopolitics. But before we get there, I want to talk about one of the other trends that you highlighted, and that's self-sufficient economies. And we've had a year of supply chains issues, shortages of things from computer chips to cream cheese. So we expect nations to find it more necessary and important to be self-sufficient. You mentioned oil. At the same time, when you expect countries to be more self-sufficient, we have the U.S. under the Biden administration implementing policies that actually hurt the U.S.'s energy independence. Does it seem like self-sufficiency is a priority for the U.S.?
Not for the government people. They don't care about that. All they want to look at is the bottom line. Now, America is one of the highest producers of oil in the world.
So when you say self-sufficiency is going to be a trend in 2022, expand on that.
there's a place called China, and they're the ones that are leading the charge. They call it a dual circulation policy.
Yeah.
Yes, they're relying on exports, but what do they have? 1.4 billion people? So the dual circulation is, yeah, we'll rely on exports, but what we're really going to rely on is making it at home and selling it at home, producing it at home and selling it at home. Buy made in China, don't buy made in anywhere else. They're doing it. And you're also looking at behind the hard product, you're seeing it in fashion and style, in entertainment. They're doing more and more of their own. The United States has everything it needs to be self-sufficient. Supply chain disruptions, once upon a time, there was a war when I was a young guy called the Vietnam War. Oh, you had to hate those Vietnamese, but now we're importing the number 2 importer of clothing and shoes. Right over here in Kingston, New York, they had the Gant factory. They used to make clothing and shoes in the United States. You didn't have to worry about a supply chain. No, we're going to export all our product, do away with all the tariffs that we used to have for decades, because we want to use the cheapest labor that we can get, and we can make more money when we bring it back. Oh, and we're talking about unions? Gone. They were gone. Oh, we're going to give you service sector jobs. You were talking about Starbucks. What's the average pay for somebody in Starbucks when they start? Oh, the grand total of $12 an hour. Wow, isn't that great? Yeah, but if you work there a while, you get up to $15 an hour. So you did away with manufacturing, where you had a middle class in America that's now diminished because they turned it into, I love the name, by the way, they call them barristers. When I was a young kid, I used to be a soda jerk when I worked at a soda fountain. But anyway, where do you get a job? At Amazon? Oh, no, how about Target? I think you have a better job at Home Depot. They're paying the people nothing. When you had manufacturing, you had a society that had a middle class. It's gone, but not in China. Before China came into the World Trade Organization, you look at their GDP levels. In 1990, 5% of the Chinese were middle class. Today, 35%. Manufacturing.
Well, let's talk about this dual circulation. It's part of China's master plan to become self-reliant in terms of resources and technology, but as you say, also in terms of demand through its huge domestic market, which is seemingly developing a preference for local brands in China.
Right.
So what does that mean for the U.S. economy then?
The U.S. economy, one of our top trends for 2021 was China 2021. The 20th century was the American century. The 21st century is going to be the Chinese century. The business of America has been war. The business of China is business. They just passed a bill in the United States, a defense budget for $778 billion. Isn't that great? Yeah. Oh, you did a great job with that Iraq war, Afghan war. Only cost about $6 trillion. Haven't won anything. China, how many wars has China been in fighting around? So the American century is over if they continue to go the direction that they're going with the crime syndicates in charge. These are not the brightest cats on the planet.
So when you say it's the era of China, does that mean you see the US dollar losing its place as the global reserve currency?
At some point, yes, as the United States debt level keeps going bigger and bigger, when the equity markets go down, and the economy goes down, this is a transition. I look at this as the end of the British Empire after World War I, or before it, as it was going down. And all of a sudden, the pound wasn't worth an ounce. And You're going to see the same thing happen with the United States. This is the end of the United States as I see it, and as it keeps going in this direction, and the dollar will be replaced, and probably by the yuan at some point.
So you see the dollar being replaced by the yuan in what kind of time frame here?
Oh, it's years away, but
Okay.
it's, and again, anything can happen if war breaks out or something. You don't know, but dollar's going to go. It's going to go south at some point. It just is no reason again for it to be where it is, other than the other ones is so weak. But the American economy cannot sustain itself by continually going deep into debt and printing more money backed by nothing and printed on nothing. Oh, again, look at your trade deficits. They just keep getting bigger. Oh, we just had a little decline in the last one. But you can't keep going on like this.
Well, you mentioned defense budgets. Now, China has been increasing its defense budget very drastically over the past couple of years, which brings us to the geopolitics conversation, because we have tensions between the US and China escalating, the US now boycotting the Winter Olympics, China posturing more aggressively over Taiwan, security analysts saying that Xi Jinping is testing the Biden administration, seeing weakness, particularly after the Afghanistan debacle. So what is your 2022 outlook for US-China relations?
Well, they're going to continue to get worse. And again, you mentioned about the Olympics. Go back to the 2014 Olympics in Russia. They did the same thing. Don't go to Russia. The Black Widow, you're going to die. You go to the hotel. Oh, and then what do you do in the meantime? Oh, Victoria Nuland, the Assistant Secretary of State and the ambassador, and handing out cookies in Maiman Square over there and pushing the revolution going on in Ukraine. They do it all the time. Again, when I was a little kid, they had me hiding under a desk in case an atom bomb went off because Russia was going to drop it on us. And by the way, I want to make that point. They had little kids like myself scared to death that an atom bomb was going to drop and we were going to die. We had to go under a desk. That is the same kind of things with the COVID war. When you're sitting down, Michelle, it's okay to eat. But when you stand up, you put that mask on because that's when the virus is going to get you. Hey, you're in an airplane. You could eat and drink without the mask on, but put it back on because the virus knows when you don't have that mask on, and it's going to get you because you stopped eating and drinking. I'm mentioning this to show you the stupidity of the people in charge and the fear and hysteria they keep selling. They haven't stopped selling hate Russia since I was born. It's the military-industrial complex that a man by the name of Dwight D. Eisenhower, 5-star general, not like these little boys over there that play general now, Supreme Commander of the Allied Forces, 2-term Republican president, that warns the people of the United States on January 17th, 1961, in his farewell address, that the military-industrial complex is robbing the nation of the genius of the scientists, the sweat of the laborers, and the future of the children. So let's keep selling hate Russia, hate China, war's going to happen, here we go, and another big defense budget, and nobody cares.
Well, look, on the COVID masks, there is seemingly no rhyme or reason for some of the policies being instituted. I hear you there. But in terms of Russia and China testing American resolve, perhaps a stronger defense budget is needed in order to deter any action, because you have Putin moving forces onto the Ukraine border, potentially testing how the Biden administration would respond to any kind of aggression. So how do you see Russia-US tensions playing out in 2022?
The United States couldn't beat the Taliban, 98,000 people. They know that they're not going to get in a war with Russia, or they couldn't win in Iraq. They haven't won a war since World War II. They couldn't win in Vietnam. They lost in Korea. They're not going to challenge China or Russia. This is talk. Oh, and China has troops on the border over there. Yeah, you mean the Russian border and the Americans have no. What America has no right to be anywhere but in the United States.
All right. Well, let us end this with another trend that you're forecasting, which perhaps, depending on your perspective, is more pleasant, I don't know, personally, it scares me quite a bit, and that is the metaverse. Because you're forecasting the growing meta world, you talk about a more aggressive move into the meta world, or metaverse, as Mark Zuckerberg calls it. So break that down for us. What does the metaverse look like in 2022?
Well, this is the beginning of that whole movement. I mean, you had an industrial age, an information age. This is a meta age. It's going. I mean, here we are. We're zooming. Who'd have thought we'd be doing this 10 years ago? You know, look at what's going on now. So now you're going to take in virtual reality. And it goes back again. I talked about the industrial age. You look at the education system. The industrial age began the education system because before that, people were making their own things and then became industrialized. So the people that were making things had to go to work in the factories. So going back to the metaverse and the meta age, what did they teach the people? How to read, write, do math. That was the beginning of the education system at the beginning of the industrial age. Now we're going to go into a whole different education system. The public education system is going to vanish in years to come. It's going to be a meta education system. It's virtual reality. You're sitting in the classroom, but you don't have to go to the public school. You can have the best teachers that you want in the fields that you want to learn from around the world. There's going to be a lot of opportunities here, but there's going to be downsides too, because there's less human connection. And you already can see that happen. So it's going into a whole different world. So there'll be a lot of entrepreneur opportunities. And like everything else, there's minuses and pluses.
How can an investor capitalize at this point on the growing metaverse trend, Gerald?
Well, to me, the biggest one, there's going to be a lot of them in healthcare, in education, in communications. Again, let's go back to it and tie it all together. We're talking about before about how can stocks be going up in airlines and cruises and commercial real estate. How many businesses aren't sending people to go to business meetings around the world? You don't have to. And now you get into the meta world, it's even going to be less. So those kind of things is a positive and a negative. So there's again, to me, the biggest one, by the way, as I feel and see it, is education, because the education system we have now stinks. Americans spend more than just about any other country, and we don't even win place or show, according to OECD, Organization of Economic Cooperation and Development Countries. So that to me is the biggest one, because look at college costs. Again, we write about in the Trends Journal about the debt levels and how people are going to become veterinarians, to become dentists, to become chiropractors. And they're so deep in debt, they'll be into it for the rest of their lives. You don't have to do this anymore. And again, the younger generations, they've been born into it. And so this is their life, and it's going to keep expanding in that direction.
And is there a way for an investor to capitalize on that, like it or not?
Oh, yes, that's what I'm saying. Yeah. Start getting into it and see where it's going to go in all the different directions. If you have that kind of mind that understands that business, and that's your passion.
But you don't have any sort of specific
again, I would go education. Education would be it for me. That would be my number one.
All right, well, Gerald, it has been an education chatting to you. Certainly very entertaining and informative. Thank you so much for your time. Thank you for giving us your outlook for 2022. Gerald Celente, really appreciate it.
And thank you for having me on, Michelle. And Happy New Year.
Happy New Year to you.